If we bring up Bitcoin, it is inching up just a little bit. So again, let's start from the basics here.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway shares why Bitcoin could soar above $100,000 and breaks down strategies to become a winning trader and investor in crypto. Let's catch him up to learn more.
On Bitcoin, you have a parallel channel. Okay, parallel channel short term. Notice how the last 2 days we hit, and bounced. Now again, as long as you stay within this parallel channel, the odds of moving up towards the high end of the channel, which is also this parallel here, right? This bigger parallel, these two lines, see the parallel channel right here and then this one up here. These are two parallel channels. They actually meet at where? 107 to 108,000. That is still your most probable outcome based on technical analysis. Doesn't mean it's going to happen, but remember, it's about a 75% chance that we are still headed to 107 to 108,000. Now, if we break the parallel, then all of a sudden, this level comes into play, which basically is a flat top right here with this low, and we kissed it on that dump day right there. That's at around 91 to 92,000. Between these two lines, probability diminishes from 75% bullish to about 60% bullish. So it's still net bullish. You would still favor upside, but it's not as robustly bullish anymore. And the reason why I go over this, folks, is to understand most people, most of us investors, and again, this is me for years of investing, it was always like, oh, it's bullish no matter what, right? That was really me in the first 3 years of trading and investing. It was like if I had a belief in something, it didn't matter. It was just like, no matter what the chart does, I still think it's going up. Then you start getting to this point where you start to say, wait a minute, I see that when these things do change, it changes the probability, and you can back test this stuff, and we've done that thousands, if not hundreds of thousands of times here at Verified Investing to understand these changes in probability. And so going back to the chart, we can very clearly see that if you break in between here, yes, it still favors the upside since 91 to 92 is holding, but it's just not as bullish because you've broken the first channel. If at some point we break 91, odds flip then to being bearish, and you would favor a move down to 75. But right now, again, to be crystal clear, the odds still heavily favor a move up to 107 to 108,000. All right, next up, let's take a look at gold this morning on the back of the CPI data, and the CPI data is helping gold inch up. Remember, we closed outside of this bearish parallel bear flag. Now, remember, this is the same thing. So let's go over these probabilities again. So this is, again, whether you're into gold or not, doesn't matter. This is educational to the T. All right, so when we were inside of this parallel, it favored the downside by about 75 to 80%. Once we closed above yesterday, it takes it down to 60%. Now, why isn't favoring a bullish move yet heavily? Because you haven't negated the wide range red bar. This bar is a stamp. It is a tree. It's a flagpole. To flip to a bullish probability, we need a daily close to negate the power of that red candle. So right now, you went from a 75-80% downside probability to about a 60% downside because you're still inside of the wide range red candle. And then if you close above here, which is around 27.15, 27.20, you would then flip it to probably starting to favor the upside back towards new all-time highs. Double top would be your level. And again, I go over this, guys, because it's a whole new way of investing, right? It's a way where you don't rely on emotion and just being like, oh, I'm always going to love gold, or I'm always going to love Bitcoin, or I'm always going to love Tesla, to much more of a finite, disciplined approach where it's all based on probability. And the reason why probability is important is it allows you to decipher how much money you should invest. When probabilities are high, you can invest a lot, right? Because it's you're winning 80% of the time. When it's 60%, you probably back that amount of money off a little bit. Now, you still may keep it in the trade, but also when it flips, do you exit the trade fully? Do you flip it around? And this is a way to manage your money like hedge funds manage their money. The best hedge funds in the world are always, they have computer programs now that are analyzing probability based on these factors that I'm revealing to you in this game plan. Super, super cool stuff. But again, it's the idea of bringing retail investors, which are honestly crapped on over and over again by institutions and bullied by institutions, where they're just constantly, pushing this narrative and getting you guys to kind of get more and more bullish, and then they're just dumping into you. I mean, there's a reason why markets were at all-time highs in '07, just before '08, '09, and a massive collapse where most investors lost 60, 70, 80% of their money, right? I mean, again, think about that. Now, some hedge funds got demolished as well. Some banks did as well. But there were players out there that scored massively during those periods. So the idea is if you start to shift your mindset, you really start to become more premium in terms of your abilities and basically raising your game to compete with these institutions.
Bitcoin's recent drop below $100,000 has sent shockwaves through the cryptocurrency market, triggering $1.5 billion in liquidations and steep declines across major altcoins. The flagship cryptocurrency slipped from $101,000 to $96,880, sparking a cascade of sell-offs that rippled through the broader market. This downturn has left analysts divided over whether it signals a temporary correction or a prolonged slump. Altcoins bore the brunt of the turbulence, with XRP plummeting by 23%, and Tron, Cardano, and Ethereum suffering losses between 7% and 13%. Some speculate that large sell orders and record liquidations may have been orchestrated, further destabilizing the market. Adding to the unease, concerns over quantum computing's potential threat to blockchain security have dampened investor sentiment. While caution dominates the current outlook, history suggests crypto markets often rebound strongly. Experts forecast a slim 6% chance of Bitcoin climbing to $150,000 by January, while Ethereum has a 10.5% probability of reaching $6,000. As investors weigh risks and opportunities, market watchers suggest this downturn may present strategic entry points for the bold, underscoring the ever-volatile nature of cryptocurrency trading.
We're seeing the markets kind of rally today off the CPI data, but the question is, are we still going to see that cycle top coming over the next 1 month period? So let's get right into the action here. Let's go over to the big board and take a look at where things are. All right, so we're going to go over the CPI data first, but you can clearly see the markets reacted positively to this number today. Now, expectations were for 0.3 on the month-over-month number, so 0.3%. Okay, it came in exactly at 0.3. So why are the markets reacting positively? There's been this general feeling that it might be worse than expected. Inflation is starting to surge to the upside. In fact, it is worse, right? Now, you might say, well, wait a minute, but the number was 0.3, forecast was 0.3, so it was in line with forecast. It was in line with what analysts and economists had said. But look at last month. This is the kicker, guys. Last month, we only had 0.2% inflation. So yes, it was in line with estimates, but inflation is actually starting to go back up. Last month, 0.2, this month, 0.3, and actual, again, 0.3. Now, year over year, came in line with estimates. Forecast 2.7, actual 2.7. So again, it was in line with forecast. So markets are rallying. Investors are like, whew, thank goodness. It was in line with estimates. So we're just doing just like we are. Inflation will head back to 2%, just like the Fed says. Not so fast. Last month, year over year, 2.6. So we're marching towards 3% here. In fact, as long as we don't have a recession, I don't see how we don't get back to 3% on inflation in 2025. Because again, you just have too much money being created. You have too much money in terms of the Fed lowering rates. And again, think about that. Inflation. Remember the whole, the Fed saying, hey, we're going to get back to 2% inflation. That's our target on inflation. That's their target. Yet here we are creeping up from 2.6 to 2.7. And they're not only did they cut 50 basis points 2 meetings ago and last meeting 25, but they're going to cut next week 25 basis points again. But again, don't worry, guys. Our goal is 2% inflation, right? I mean, it's like a little silly in that respect. All right, either way, you guys get the gist here. Inflation is creeping up. Markets are happy it wasn't worse than expected. But again, don't be fooled by just the fact that it came in at forecast. We are still up from last month in terms of inflation.
Ethereum's chances of hitting $5,000 by year-end appear slim, with Thrive Research assigning an 8% probability to this milestone. Despite the low odds, traders and institutional investors remain optimistic, fueling hopes for a long-term upward trajectory. Recent data on Ethereum ETF shows a staggering $305 million in daily inflows, with Fidelity's Ethereum fund leading the charge. This surge in demand highlights growing institutional confidence in Ethereum's potential, even as it struggles to break through immediate resistance levels. Prominent traders continue to project bullish scenarios for Ethereum. Poseidon predicts a dramatic breakout beyond the current 4-year range, while CoinMemba maintains a steadfast $5,000 year-end target, citing structural market shifts. Adding to the enthusiasm, Ethereum achieved its highest weekly close of the year, sparking speculation about a retest of its all-time high at $4,878. While near-term hurdles persist, market sentiment reflects cautious optimism. Options trading indicates a balance between bullish and bearish positions, suggesting a neutral outlook for now. However, the mounting institutional interest and resilient trader confidence suggest that Ethereum may be poised for significant growth in the months ahead, even if the $5,000 target proves elusive in 2024. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.